What is a trading company? A trading company is a type of company that focuses on buying and selling goods or products produced by other parties. This type of company buys products from producers or distributors and resells them to consumers at a higher price to make a profit. There are two types of companies that fall into this category, namely large trading companies that usually become distributors and small or retail trading companies that sell goods directly to end consumers. Trading companies can also be divided into two categories based on how they obtain their products, namely companies that obtain products from producers or distributors and companies that import goods from abroad for resale in the country. This type of company plays an important role in the trade and consumption industry, as it provides products needed by consumers and helps drive the economy. Some examples of trading company characteristics. The specific characteristics possessed by trading companies are: 1. Has the main activity in the form of buying, selling, storing in the warehouse, and selling again. 2. Does not carry out the process of producing goods. 3. The calculation of total profit is based on the total sales proceeds minus purchase costs and operating costs. 4. The company does not carry out the production process of the goods sold. 5. Goods sold are sold directly without any processing or changes. 6. Accounting activities are based on inventory accounts, namely the calculation of cost of goods sold and income statements using single-step and multiple-step forms. The following are some of the distinctive features and other characteristics of a trading company. 1. Main activities. The main activities of a trading company are buying, managing, and selling products. The company is not involved in processing or converting products that will be sold to consumers. 2. Capital. The capital of this type of company is usually obtained from the cost of goods or products that have been sold. If products are not sold quickly, the company may experience a shortage of capital and have difficulty purchasing further products. 3. Revenue. The main revenue of a trading company comes from the sale of products. This type of company does not generate additional revenue like a manufacturing company. 4. Profit calculation. This type of company earns profit from the difference between the selling price and the purchase price of the product, as well as operating expenses. If sales decrease, the company's revenue and profit will also decrease. Sales strategy. Effective sales management is essential for this type of company to increase revenue and profit. In this case, the sales strategy must be directed appropriately in order to increase sales turnover, and there is a good capital turnover. Knowing the characteristics of a trading company is very important for business owners or aspiring entrepreneurs to understand how the business works and runs well. Examples of types of trading companies. Broadly speaking, trading companies are divided into two types, namely: 1. Based on the products empowered. A. Production goods trading company. Companies that trade products in the form of raw materials as the basic material for making products or production tools to produce other products. Examples: logs and lathes. B. Finished goods trading company. A company that trades the final product of goods that are ready for consumption. Examples: backpacks, clothes, refrigerators. 2. Based on the type of consumer involved. A. Large trading company, wholesaler. A company that directly buys products from factories in large quantities and sells them in large volumes as well. Example: wholesaler. B. Middleman trading company. A company that buys in bulk for resale to retailers in medium quantities. Example: sub-wholesaler.